Good evening, my YouTube family. How's everybody doing this Monday night? Hopefully, everybody is doing wonderfully blessed. And hopefully, you guys had a green day in the markets today. Guys, just real quick, I'm going to be changing the title to my name. I'm going to be calling it now Crypto and Stock Talk with Jaime G. Reason being, guys, is I invest in crypto and I invest in the stock market, guys. And guys, there's a lot of people out there that would like to know about crypto and stock, right, guys? So I don't know, maybe some of you subscribers that look at it for the stocks, don't know anything about crypto. Right? I've been in crypto for a little over a year and a half now, guys. Right? So I know a little bit more than others, and I know a little less than others. Point being is I am somewhat educated in crypto, guys, and right now crypto's taking off. You got Bitcoin. There's so much about crypto, guys, that people don't know about. So I'm gonna start sharing, guys, on both. I'm gonna make a video that is merged, right? I'm gonna try about 5 to 7 minutes on crypto, 5 to 7 minutes on stocks. If you guys think that's a good idea, please leave a comment down below and let me know. And if not, let me know in the comments also, guys, on what you guys think. So this is Crypto and Stock Talk with Jaime G. That be me, guys. For those of you that don't know, now you know. I'm the guy that brings the latest and greatest and that crypto and them stocks for your radar. So hopefully your account, my account can go up in them dollar signs, guys. We're going to be talking about on the stock side of things, 3 big dividend stocks yielding at least 8%, analysts say, and they give it a buy. Guys, it's a good hedge against inflation, these dividend stocks, right, guys? Because dividend stocks usually don't go up and down very much, guys. They're pretty, they go up, they go down, right? But they're not like, for example, Tesla, right? I can attest to this because I own Tesla, and it went down like 35% in 2 weeks, guys. I got demolished. I got freaking annihilated on my Tesla, right? Because I own 10 shares. So the point being is, guys, these are more of a safer stock, if you will. And they're saying that the volatility is not over and that they think we're still going to be in a correction, right, guys? We've been in a correction for about 3 weeks solid, but as you can see, the markets are still uncertain, right? They're still unsure because of the treasury bonds and just everything in general, guys. So I don't want to be too long, just long enough. None of this is financial advice. This is me sharing my thoughts and opinions as invested in the stock market, in my crypto account and my stock account, guys. If you guys can do me a favor and show this guy some mad love, I would really appreciate it, guys. And if you guys can destroy that like button, give it a fat thumbs up, maybe leave a couple comments down below, and hit that notification bell so you can be notified when I come with the latest and greatest. And it helps me with that YouTube algo, guys. I'm trying to get to that 100 subscribers, then 250, guys. You know what I mean? Then on to 1,000. That's my goal. I would like to, but that is not why I do this, guys. The whole reason why I do this is to share, to make these videos, so hopefully you guys enjoy these videos, and hopefully you guys benefit from these videos, and most importantly, hopefully your accounts benefit from these videos, guys. You know what I mean? That's why I do what I do. Regardless whether I get 100 subscribers or not, I will continue to make these videos. All right, let's get it. 3 big dividend stocks yielding at least 8%, analysts say. Do you like roller coasters? I do. It says, according to Deschutes Bank, we're looking at some roller coaster volatility for the next few months, guys. Few months. With near-term gains likely following by a quarter 2 retreat and second half gains. The firm expects share values to fall in the next 3 months, perhaps by as much as 5 to 10%, guys. So they're thinking from here on out for the next 3 months, 5 to 10% correction. That's a nice little chunk, right, guys? So these dividend stocks would be good to look into investing in, guys. I know I'm going to. I don't have any yet, but I think I am going to pick up all 3 of them tomorrow. It says the more front-loaded the impact of the stimulus, and the direct stimulus checks at around a quarter of the new package clearly are one-off. The sharper the peak in growth is likely to be. The closer this peak in macro growth is to warmer weather, giving retail investors something else to do, and to an increased return to work at the office, the larger we expect the pullback to be, Chadha noted. That's the midterm. In the long view, Chadha expects markets to strengthen by year's end and has put a 4,100 target on the S&P 500. This is up from its previous 3,950 target and suggests potential gains of 4% from current levels. So for investors, we're looking at a rocky summer and fall. That sucks. With some dips and gains likely in the market. In the environment, a defensive stock play makes sense. It provides some stability to the portfolio, as well as some insurance should should the gains not materialize. Reliable dividend stocks with the regular payouts provide an income stream that independent of the share price appreciation, as well as share profile that is less volatile to begin with. Like I said, guys, make the ideal move for investors worried about keeping up returns while coping with high macro volatility. All right, guys, to that end, we've used the TipRanks database to pull up 3 high-yield dividend stocks that share a profile, a buy rating from the Streets Analyst Corp, a considerable upside potential, and a reliable dividend yielding over 8%. Let's see what Wall Street pros have to say about them. First one on the list is Monroe Capital, ticker MRCC. Just real quick, guys, I just wanted to throw out there, right? It is good, right? 8% is very good, right? Because a lot of these other stocks only do 1%, 2%, some 3%, but 8% is good. Oh, there is 10% dividend stocks that I'm going to talk about here sometime this week as well, guys. Just want to put those on your radar. So, first one, Monroe Capital. Well, we'll start with Monroe Capital, a private equity firm invested in healthcare, media, retail, and tech sector. Monroe is focusing its business on minority and women-owned companies or on companies with employee stock ownership plans. Monroe offers these sometimes undervested demographic access to capital resources for business development. Monroe has shown 2 contradictory trends so far this year: declining revenues and earnings, along with rising share value. The company's top line at $12.6 million was down 6% from quarter 3 and 25% year over year, while EPS fell 40% sequentially to 42 cents year over year. However, EPS more than doubled. Looking at share price, Monroe stock has gained 60% in the past 12 months. That's not bad, guys. You know what I mean? They pay a dividend, plus it got 60%. It's gone up 60% in the last 12 months. That's a win-win situation there. On the dividend front, Monroe paid out 25 cents per share in December. The next schedule is the next is scheduled at the same amount for the end of this month, with an annualized payment of $1. The dividend yields a strong 9.8%. They compare favorably to the 2% average yield found among peer companies. The dividend attracted attention from upper hand analyst Chris Kowalski, rated 5-star by TipRanks. We continue to see a runway to eventual dividend coverage, with full fees expensed as management grows the portfolio to its target of 1.1/1.2x leverage from the 1x currently, and redeploys funds currently tied up in non-accrual once resolved. The primary driver of return for the BDC is its dividend payout over time, and we have confidence that MRCC's new $1 distribution equity to a 10% yield is substantial, Kowalski noted. In line with comments, Kowalski rated MRCC in an outperform, which means buy, guys, and his $12 price target suggests it has room to grow 25% in the year ahead. To watch Kowalski's track record, click here, right? That's if you want to know more about the analyst, guys. The analyst's review on MRC breakdown to 2-1 in favor of buy versus holds, making the consensus rating a moderate buy. The shares have a trading price of $9.59, and their $11.13 average target implies an upside of 16% in the year ahead. That's not too bad, guys. Second one, Eagle Point Credit Company, ticker ECC. Says, let's stick with the middle market finance sector. Eagle Point is another of the capital investment companies that seek to turn middle market debt into returns for investors. The company invests in CLO equity and focuses on current income generation. In other words, ensuring a return for its own investors. While Eagle Point is a small cap player, the company does boast $3 billion in assets under management, showing that it punches above its weight. Last month, Eagle Point reported their fourth quarter for 2020 earnings with an EPS of 24 cents, below expectation of 29 cents. That's not too bad. However, the current earnings just edged it into growth quarter over quarter and year over year, as the third quarter of 2020 and fourth quarter of 2019 both came in at 23 cents. Turning to the dividend, we find that Eagle Point does something slightly unusual. The company pays out monthly dividends. That's good, rather than quarterly. The current payment at 8 cents per common share has held steady for over a year now, and as the company has not missed a distribution at 96 cents per common share annually, the dividend yield is 8.4%. This is robust by any standards. B. Riley's 5-star analyst Randy Biner covers Eagle Point, and he notes that the company should have no problem maintaining its dividend coverage moving forward. The company reports quarterly recurring CLO cash flow averaged at 75 cents shares over the last 12 months. Similar levels of recurring cash flows would leave a large cushion to service the 24 cents quarterly dividend going forward. The company announces $29.5 million of cash on its balance sheet as of February 9th. This balance sheet cash and serviceable quarterly dividend of 24 cents contribute to a favorable liquidity position. Biner wrote. Biner's comments back up a buy rating on the stock, and his $14 price target implies a 12-month upside of 23%. Wall Street takes the same stance on ECC that it did on MRCC. That's funny. They both end with double C's. I just noticed that. A moderate buy consensus rating based on a 2-to-1 split between buy and hold reviews. ECC shares have an average price target of $14, matching Biner's, and the shares are trading for $11.41, guys. That's not too bad, guys. You know what I mean? Like I said, this is a nice hedge against inflation, right? When the treasuries start messing with the bonds, with the stock market, right? These here, well, they might even go up, you know what I mean, and not down, or they might just stay flat. Who knows, guys? But I think they're a great hedge, you know what I mean, against inflation when them treasury bonds go up. Mid-market financial are not the only place to find strong dividends. Wall Street Post also recommended the energy sector, and that is where we turn. This is where we now turn. Hess Midstream Operations, ticker HESSM, guys. Hess Midstream is one of many companies in the midstream sector of energy industry, providing and supporting the infrastructure needed to gather, process, store, and transport of fossil fuel products from the wellheads into the distribution network. Hess has a range of midstream assets in North Dakota Basin Formation, moving crude oil and natural gas along with their derivatives. Hess reports results for fourth quarter 2020 early this year, showing $266 million at the top line and EPS of 36 cents per share. Revenue were up 5% year over year and relatively flat for the third quarter. EPS rose 20% quarter over quarter, but were down sharply compared to the 87 cents reported for fourth quarter of 2019 over interest to investors. The company reported over $126 million in free cash flow, which it used to fund the dividend. Hess pays out its dividend quarterly, like most of them do, guys, and has a reputation for not missing payments. The company has been raising the payment regularly for the past 4 years, and most recent dividends at 45 cents per common share was paid out in February. The dividend is considered safe, and as the company expects to generate between $610 million and $640 million in free cash flow next year. Those funds will fully cover the dividend with approximately $100 million left over. Writing from Scotiabank analyst Alonso Guerra Garcia. Hey, that's my cousin. What's up, primo? No, I'm joking, guys. Sees the free cash flow as Hess priority going forward. We expect the focus this year to be on harvesting of free cash flow, FCF, with deployment toward buybacks and further deleveraging. Improved FCF profiles this year also better position the group for a 2H21 demand recovery. Continued energy policy changes and the energy transition may be headwinds this year, but we continue to prefer exposure to the more diversified companies with FCF after dividend operationally and torque to a recovery, the analyst opinioned. To this end, Guerra Garcia rates HESM and outperform, which is a buy with the $27 price target, indicating a potential upside of 26% by year ends. All in all, there are only 2 reviews on this small cap energy company, and they are evenly split. 1 buy, 1 hold, giving Hess a moderate buy rating. The shares are trading at $21.41, and their $27 average price target suggests a 1-year upside of 26 cents. All right, guys. I think, like I said, this is great to put on your radar so that, if the markets go haywire, whatever, if you're invested in these guys, I think it's a safe play, as they like to say. Guys, I'll be making more videos on dividend stocks. I think they're great to have in portfolios as well, guys, because it's a win-win. You get paid dividends, and you get paid if the stock goes up, guys. This is Crypto and Stock Talk with Jaime G. That be me. For those that don't know, well, now you know. Guys, if you found this video useful, please consider to like and subscribe to the channel. It would mean wonders to me, guys. I appreciate it. And guys, I'm going to come through with another video right now on crypto. Right, guys? 5 things you need to know as a newbie. Right, is my next video that will be coming out here in about 10 minutes, guys. I'm going to be making it right now for you guys. So, with that being said, hopefully you found this useful. Till tomorrow, peace!